This is Eric Muathe with Muathe.com. Let's take a look at markets here. And that's the December 11, 2022. Let's take a look at JP Morgan. We're going to be taking a look at this from a weekly standpoint and from a long-term monthly standpoint. And the question is this a message for the market in a sense? But first, let's take a look at this. And I'm going to be using my uniformity concept. Links are in the description. This is the weekly chart. And we have 2 years of weekly data. And we can see on the weekly, if we take a look at this break. Now, of course, we know this break was decisive in bringing this instrument and the general market lower. So we can take this understanding that this was a major change and use my, again, uniformity concept. Should the market come back to this level and show uniform activity rejection, just like it is doing now, it tends to suggest that this is due for a pullback. Now, let's also put things in perspective. This instrument is not trading at all-time highs. Relative to this instrument, the S&P 500 is trading, and the Dow and the Nasdaq pretty much trading at all-time highs. This instrument has not gone back to previous highs. So definitely it is not in the leadership of the market. And here we can see some signs of resistance. Now, the only way to correct this is changing direction here and moving higher above this red line. But the more this red line continues to be resistance, the more the message here is that this is an area of the market to definitely be on the lookout for a change in direction and probably sideways to down from here. Let's take a look at a monthly view. So again, this is 8 years of monthly data. So 8 years monthly. Let's draw line number 1 is a backtest line. And again, it begs the question, is this an area of resistance on the monthly chart that we need to pay serious attention to? Is this a monthly sign that the next meaningful direction is down? If this is gonna be confirmed as a monthly resistance, again, based on the red line, which is the RSI backtest line. Of course, this line connects the lows here through here and connects all this, touches all these points. So that's one view. The other view is the uniformity line. And again, we see that this was a break and we haven't been back to those highs. So using the uniformity concept, we take that break line and draw our uniformity line, and you can see it right there. Very clear here with the RSI being around 61.8. This is something that we should not ignore. It might be that this is telling us the market is changing its behavior, especially the more this is confirmed as resistance, the more this is a major change in the market's movement. And again, the only way to correct this, for this to continue moving higher, for this to test all-time highs, if not improve on them, there's only one way. The RSI would have to move above this blue line, which would also be the need to move above this red line also, which we just discussed. Right now, it looks like the way things are shaping up, and of course this could change, but if this is confirmed as resistance on a monthly time scale, even given the weekly chart, things are seemingly pointing down. And given that the S&P 500 is essentially trading at all-time highs after a nice bullish run spanning many years, take a look at the Nasdaq also, all-time highs as we know. Nice move over the last couple of years. The implications of a major change would be, of course, to usher in a change in the market behavior with the Dow And given the size of this move here, a change in the market behavior could be the beginning of an aggressive bear market. Of course, time will tell. We can and should take things moment to moment, but the setup is there for a change. And it's gonna be an ugly one if it's to the downside. We are talking thousands of percentage points down on the Dow if this develops into a true nasty bear market. Again, time will tell. All is well. Eric Muathe with Muathe.com. Love light, light love. Namaste.